So, you want to give every single person on Earth $10,000 a month. No application, no means test, no strings attached. Just a payment that lands in every bank account on the planet every 30 days, forever. It sounds like the sentence that ends poverty. It sounds like the moment scarcity stops being a human problem and starts being a solved one. It is not that, not even close. What actually happens to prices the day that money lands? Why has some version of this experiment already been run quietly in half a dozen places with results that look nothing alike? And why would the poorest people on the planet, the ones this is supposed to save, end up getting hurt first? Let's start with the number itself, because almost nobody who proposes this has actually run it. There are roughly 8.3 billion people alive on Earth as of the middle of 2026. Multiply that by $10,000 and you get $83 trillion. Not per year, per month. Multiply that by 12, and the annual bill comes out to just under $996 trillion. Call it a quadrillion dollars, because at that scale, the difference stops mattering. For comparison, the entire global economy is projected to produce around $126 trillion worth of goods and services in 2026. Every factory, every farm, every office, every mine, every line of code written by every person on the planet in a full year. This program would cost close to 8 times that, every single year, forever. Here's a cleaner way to see the size of it. Add up every dollar, euro, yen, and yuan sitting in every checking account, savings account, and money market fund on Earth, and the total comes out to around $98.6 trillion. That is the entire liquid money supply of the human race. One single month of this program would burn through roughly 84% of all the money that currently exists anywhere in the world. Here's the part that gets skipped over in the fantasy version of this idea. Money is not wealth. Money is a claim on wealth, on the bread, the apartments, the oil, the hours of other people's labor. If you hand every person on Earth a much bigger pile of claims, but the number of apartments, loaves of bread, and barrels of oil stays exactly the same, nobody actually got richer. Every existing claim just got worth less, because there are now vastly more claims chasing the same pile of stuff. Smaller versions of this have actually been tried, and they mostly worked precisely because of how small they were. Alaska has paid every resident an annual dividend from its oil wealth since 1982, when the very first check was $1,000. And in 2025, it was $1,000 again, sent to more than 600,000 residents, while the year before that, it had been closer to $1,700. The number moves with the price of oil and the returns on an actual investment portfolio, because it's a share of real wealth sitting in a trust, not money conjured to match a promise. In 2017 and 2018, Finland paid 2,000 randomly selected unemployed citizens a tax-free 560 euros a month for 2 years, with no reduction if they took a job and no obligation to look for one. Employment barely moved. Recipients picked up about 6 extra days of work over the year, but they reported meaningfully better life satisfaction and less depression, mental strain, and loneliness than the control group. Since 2016, the charity GiveDirectly has been running the world's largest basic income study in rural Kenya, paying roughly $40 a month to about 23,000 people across 195 villages, with some payments running a full 12 years as part of a $30 million project. The predicted laziness never showed up. Recipients invested more, started more businesses, and earned more than the control group. Every one of those experiments shares a quiet feature. The money involved is a rounding error against the size of the economy it lands in. Kenya's entire multi-year study will spend on the order of what the global $10,000 plan would spend in well under a second, which is why the next data point matters more than any of them. In 2020 and 2021, The United States ran the closest thing to a real-world pilot of handing large cash payments to almost everyone at once. Washington sent direct payments to households in 3 rounds, up to $1,200 under the CARES Act. In March 2020, $600 that December, and $1,400 under the American Rescue Plan in March 2021, adding up to roughly $817 billion delivered directly to American households over the course of the pandemic. That is an enormous number by any normal standard, and still about 1,200 times smaller than what this program would cost the world in a single year. Even at that scale, a St. Louis Federal Reserve study found that stimulus payments accounted for about 2.6 percentage points of the 7.9% inflation rate the U.S. recorded in February 2022, and separate research out of the San Francisco Fed put the contribution closer to 3 percentage points by the end of 2021. USM2, the broadest common measure of the money supply, surged by roughly 27% between 2020 and 2021. By June 2022, inflation had climbed to a peak of 9.1%, the highest reading in over 40 years. That's what a rounding error does. Now scale the same mechanism up until it isn't subtle anymore. In 1923, the German government was printing money to pay striking workers and cover war reparations it had no other way to fund. None of that new currency corresponded to a single extra loaf of bread or ton of coal being produced. A loaf of bread in Berlin that cost around 160 marks at the end of 1922 cost 200 billion marks by late 1923. Before the war, 4 German marks had bought a single American dollar. By November 1923, it took about 4.2 trillion marks to buy that same dollar. Wages were renegotiated by the week and still lost the race against prices that moved by the day. That is the endpoint of the same equation running at full scale. More claims, same stuff, and a currency that stops functioning as a store of value entirely. Run the $10,000 a month program through that same logic, and the sequence is predictable. Landlords, grocers, and employers all know on day one that every renter and customer and employee just got a guaranteed income floor nearly 8 times the size of the entire global economy behind it. Prices don't wait for the money to be spent. They reprice on the expectation of it. The $10,000 figure stays fixed on paper, but what it actually buys starts shrinking within weeks, then months, in a currency that has been permanently detached from how much bread, housing, and oil humanity can physically produce, which hasn't changed by a single unit. The people hurt worst and fastest in that scenario are not the ones who caused it. They're the people on the thinnest margins already. The ones with no savings buffer and no assets to reprice upward alongside everything else. The people who come out ahead are the ones who owned real estate, stocks, commodities, or land before the checks went out, because those assets absorb the extra currency and reprice with it. So a program built to close the gap between rich and poor ends up doing the opposite. It hands everyone the same number of dollars and then lets the market decide in real time that some people's dollars were always going to be worth more than others.